According to Paul Tudor Jones, the U.S. economy is either in or on the verge of a recession, despite a months-long bear market that has brought Bitcoin and Ethereum down 70% from their highs. Paul Tudor Jones has stated that he believes the top two cryptocurrencies would rise in a post-recession future. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed, to make educated and timely decisions, and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. In an interview, hedge fund managers explored crypto's place in the current financial landscape, predicting the young asset class might see major growth in the future. Jones discussed the present status of the world economy, stating that the United States was headed for a recession if it wasn't already in one. I'd say we're getting prepared to go through the recession script, he predicted, forecasting that the 2020s would be distinguished by an emphasis on debt dynamics, fiscal deficits, and policy that provides people confidence in the long run worth of a currency. Jones claimed that central banks had participated in extensive experimentation in the years following the global financial crisis, claiming that suppressed yields and epidemic relief packages were the result of fiscal and monetary experimentation. When it comes to digital assets, Jones sees high rates of inflation as a potential driver for a crypto boom. In a time where there is too much money, which is why we have inflation and too much fiscal spending, anything like crypto, specifically Bitcoin and Ethereum, where there is a finite number of what will have value at some point. When CNBC's Andrew Ross Sorkin asked if cryptocurrency would be worth far more than it is now, Jones answered, "I think so, sure," but added that he didn't know when prices would climb. Jones mentioned in the interview that the U.S. unemployment rate is now at a comparatively low 3.6%. He contended that for Fed to change course, unemployment rates would have to rise. If he is correct, growing unemployment might boost cryptocurrency, as the market has been heavily resilient on the Fed's movements this year. Jones predicted that a shift in the Fed's aggressive posture may spark a rally in global markets. When a pivot occurs, there will almost certainly be a tremendous rally in a variety of beaten-down inflation trades, including crypto, he said. Jones also disclosed that he still has a stake in Bitcoin and has been a vocal supporter of the currency since advocating it as a hedge against inflation in 2020. Is it smart to begin or continue investing while crypto is down? In case you didn't know, Bitcoin is currently on sale. Two experts at a big financial institution believe Bitcoin is now undervalued at $20,000. JP Morgan Chase reportedly assessed the coin at $38,000, which is around 90% higher than its current worth. According to Juran Timmer, director of global macro at Fidelity Investments, Bitcoin might be valued up to $100,000 in 2 years, and its actual market value is presently between $40,000 and $50,000. According to Chris Brendler, managing director and chief market analyst at D.A. Davidson, Bitcoin will reach almost $38,000 by conclusion of the year and $50,000 by the end of 2023. Bitcoin is a unique animal because it is difficult to say what exactly it is worth, said Brendler. It tends to have these exaggerated moves on the upside when folks are only buying because they want it to go up in value. When it starts to go down, these folks exit. But the price of Bitcoin will grow higher than it is today in the next coming years. So what does this signify for cryptocurrency enthusiasts considering Bitcoin as an investment? Is it wise to take benefit of the crypto market's sale and invest now? According to some financial experts, the short-term dangers of investing in cryptocurrency may be worth the long-term potential returns. As long as it doesn't prevent you from meeting your other financial obligations and you can clearly define your long-term goals ahead of time. Why are so many large companies turning on crypto now? Today, Bitcoin and other cryptocurrencies are held by dozens of publicly traded corporations. These corporations are investing in cryptocurrency for a variety of reasons. Companies should diversify their portfolio and have a reserve in crypto assets. Similarly, as blockchain technology becomes more feasible, large corporations see the value in investing in cryptocurrencies. MicroStrategy is a company established in the United States that offers other businesses and corporations business information, software applications, and cloud storage services. Michael Saylor, the company's CEO, expressed concerns about diminishing cash returns, increasing prices, weakening fiat currencies, and other macroeconomic variables, implying that Bitcoin is a better long-term store of wealth. Over the last 2 years, MicroStrategy has made many large investments in Bitcoin. MicroStrategy was able to recover from losses suffered during the dot-com meltdown in the late 1990s and early 2000s thanks to the approach. Executives see Bitcoin as a stable, long-term investment and believe that digital assets can insulate the corporation from unfavorable market movements. Microsoft's interest in Bitcoin, Ethereum, and other cryptocurrencies demonstrates that the business is finally paying attention to the cryptocurrency field. In December 2014, it even claimed that it would include Bitcoin payment mechanisms in its software. However, due to cryptocurrency volatility, Microsoft's Bitcoin payment mechanism has been shut down 3 times. Despite its modest success, the company believes that using cryptocurrencies to purchase and recharge user accounts on its website, as well as to purchase digital products and services, has potential. Cathie Wood, CIO and founder of ARK Investment Management, has been an outspoken supporter of Bitcoin and Ethereum. ARK Invest recently purchased Coinbase and Tesla stock. While these stocks have been volatile in recent weeks, they remain an excellent location to invest. According to Wood, Bitcoin might hit 1 million by 2030. While some investors are wary, others are more optimistic. The price of Bitcoin is rising, so investors need to be patient and understand that this market is volatile. Bear market versus bull market. Stock market motion cannot be effectively predicted in the short term, just as seeing a head or tail whenever a coin is tossed cannot. In the long run, however, a trend can be noticed when a series of upward or downward moves occurs in sequence, and this is labeled as bear market or bull market. A bull market is a stock market environment in which prices are rising or expected to rise. A bull market is defined as one in which markets rise over time without falling more than 20% from their prior 52-week high. Similarly, the phased bear market refers to a market position in which it is predicted to fall or has fallen by more than 20% from its peak. Securities prices continue to grow during a bull market. In this stage of rising equity prices, investors believe the uptrend will last for a long time. During this stage of the market, the country's economy is typically strong and job levels are high. During a bear market, prices fall and everything falls, resulting in a downward trend. Investors expect this pattern to continue, extending the negative spiral. There is a slowdown and rising unemployment during this time. In terms of GDP, the bull phase is projected to see significant GDP growth as economic demand rises, resulting in higher industrial output, sales, and turnover. In contrast with low GDP projections, a drop in demand leads to a decrease in product output, poor sales volumes, and turnover. The interest rate cycle is in a bull phase, and international investors are drawn to the high interest rate environment. This helps to keep the economy's excess liquidity under control, while the RBI lowers interest rates to promote liquidity and capex to enhance output. International investors avoid investing or withdrawing during this period. The market is flourishing, the industry is prospering, and manufacturing is thriving. In the bull phase, growth is positive, leading to increased employment. However, in the bear phase, the economy is sluggish, and sectors of industrial and production units are affected. This leads to cost-cutting, layoffs, and increasing jobless rates. Web 3.0 projects that matter for the future. In the next 10 years, several Web 3.0 technologies such as blockchain technology, cryptocurrency, semantic web, artificial intelligence, machine learning, metaverse, 3D graphics, decentralized autonomous organizations, edge computing, smart contracts, and decentralized apps will continue to flourish. This will result in additional job opportunities, personal data protection, easier communication, remote work, easier illustration of infrastructure projects, better education, and a more modern healthcare system. Users can connect with online services managed by peer-to-peer networks, which are essentially a decentralized network of computers rather than a single entity's server. In such a setting, users can own their data and conduct permissionless and peer-to-peer transactions, eliminating the need for middlemen and allowing anybody with an internet connection and cryptocurrency wallets like MetaMask to participate. Users with different online apps now have full control over their digital identities and how and when data is transferred, thanks to their private keys. We've recently seen some amazing new consumer behaviors develop from Web 3.0 projects, such as the rise of non-fungible tokens or NFTs, play-to-earn or P2E games, and decentralized autonomous organizations or DAOs. Because Web 3.0 is offered as the standard of a new generation of interest, we might think of it as a collection of rules and standards that apply to every internet user. As a result, rather than being limited to certain apps, Web 3.0 would be usable across the whole internet. That's a wrap for this video. Let us know in the comments below if you think that cryptocurrency has a viable future. If you enjoyed this video, give this a big thumbs up, and do not forget to subscribe to our channel if you want to see more videos like these. See you next time.